Good morning and welcome back to Almus Market Mornings. There's been an interesting development on the domestic side this morning, especially for precious metals. The government is reportedly discussing a possible cut in the import duties on gold and silver, with the jewelry industry pushing for a much lower rate from the current 15%. And if that goes through, it can be quite an impact on the domestic bullion market. On the currency side, we saw on last Tuesday that the INR appreciated by almost 30 paise, but interestingly, the RBI seems to be changing its approach as well, with foreign exchange reserves getting a boost from the fresh dollar inflows since June due to the FCINRB regulations. The central bank appears more comfortable intervening regularly to support the rupee rather than waiting for a sharp move. Good morning, Jairam sir. If the government does bring the gold duties down from 15% to around 6%, what kind of impact could we see on gold prices and the demand in India?
Good morning, Ishan. Uh, yeah, I think it's going to be one of the shortest period in which this duty is going to be reversed because not long ago it was raised from 6 to 15%. Yes, if they do, where the reported rationale is to bring the large amount of trade that's happening in unofficial channels. So if it does happen, we will have an impact on the price, no doubt, downward impact, but not as much as one would think. If it is reduced by 9%, whether the price will go down by 9%, I'm not sure, because the demand side will be quite significant, particularly after the recent bounce in the global global gold versus dollar from 3950 to almost 4700 has given a sense that we are once again in a uptrend, and the sharpness of the move also has left many people not positioned long in gold. Therefore, there could be a setback, but not as much as one would think, relative to 9%. In terms of actual price, I feel the gold prices can come down to around 1,55,000, maybe, and the silver prices also could drop down to around 2,55,000 from the current level of 2,62,000. And this also depends upon the inventory levels, and there's likely to be more demand because of the upcoming festival season as well. Yes, it's still not something that is official, and it's just a market talk that is going on, but we did have some reaction yesterday. The local gold prices, even though the fall in the global prices was much lower. So we'll have to wait and see. Whenever there is an official word about it. But definitely, market will be looking to latch on to any sharp dip that we will get from the move. As you said, the rupee did have a sudden quick retreat, or rather, the dollar had a quick retreat from 95.65 to 95.30, 40 levels on Tuesday. This was more driven by a sharp drop in oil prices on reported talks between Iran and Oman to arrive at a solution for opening the sea route at Hormuz Strait. And that apart, there was also consistent intervention from RBI at various levels, not aggressive, but definitely they kept offering dollars as and when there was a demand. Secondly, there was a reported inflow for bond market. Since the morning on Tuesday, we did see some discounts being offered on the fixing rate. So altogether, there was an impact on the prices. It went down to 95.40 in the onshore market. Even 95.25 was traded in the offshore market. But since then, it has bounced back to around 95.45 levels. That said, I don't see a sharp move either way in the USD INR, because below 95 is difficult. RBI itself may not be preferred to allow a sharp appreciation in the rupee. At the same time, any attempts to weaken the rupee beyond 95, 80, 96 will also be met with the strong resistance from RBI. And everybody knows that they have enough resources to counter any such moves. So we continue to prefer a move in the 95, 96 range for the USD INR. On the global front, we had quite a bit of data from US. The consumer price, core PCE price inflation was announced yesterday, and mostly in line with expectation, except that the core price inflation year on year was at a slightly higher at 3.7%. So the inflation continues to be well above the Fed's target. In fact, it is nearing 65 months that it has been above the 2% inflation target of Fed. So unlikely to change the market expectation of a rate hike, in October. September now is not getting much traction in terms of expectation of a rate hike. So the all eyes will be on Kevin Warsh, who will speak tomorrow at Jackson Hole. The summit starts today, and his speech is scheduled tomorrow. Whether he will speak louder at this event is something the market is speculating. Because he has been not giving away much in terms of our guidance in the meetings, and even outside of the meetings, he has not spoken much. Whether he will give some more clues about what Fed is likely to do in the upcoming meetings as inflation stays higher is very important. The core price inflation is definitely something that doesn't give comfort as it stays above 3%. GDP growth, US was once again at 1.5% as per second estimate. First estimate was also at 1.5%. Consumer spending month on month was flat, and consumer spending or consumption forms nearly 70% of the U.S. Economy, and with the low wages, other wages which are subdued. Tariffs, higher tariffs, and also the employment situation not so great, is leading to cautious consumption, and at the same time higher imports due to importing equipment related to AI investment also contributed to the GDP number remaining at 1.5%. On the other hand, business investment was much better. Okay, once again, this is all related to AI investments. So overall, the number was not too exciting. I think not much of an impact on the dollar as such from this number. On the other hand, we had a good number from Germany, where the GDP growth for quarter two came at 0.2% versus 0.1% in the quarter one, and even the business service and business sentiment also show an improvement. Overall, we are seeing some good numbers from Germany, particularly, and their increased investments in infrastructure and defense is beginning to have some impact on the overall economic scenario. And of course, Europe is the one central bank which is very much likely to hike a rate in the coming month. I mean, incidentally, we also had a rate hike by Korean Central Bank today, and it was also well expected. So monetary policies are still leaning on the hawkish side. Japan and USA are obviously on the radar, what they're going to do in the upcoming meetings. Very much the focus bond market, of course, after moving higher, has now stayed slightly at a lower level, but on a broader basis, their yields are still high. Looking at how the upcoming issuances from the Treasury will go through. So this is the focus, and of course, the focus will be on the Kevin Warsh statement, and probably month-end, demand supply situation will also determine how the rupee moves in the local market. Thank you.
Thank you, Jayaram. So, and just to summarize, if the gold import duties reversal goes through, it will be the shortest reversal in the duties we've seen. And if it happens, the changes in prices may not go down as much because the demand is still significant. And we also have the festival season coming up in India. And also, along with the global bounce in gold, will help as well. So, the local gold reacted a little more than international gold yesterday on the downside after this news occurred. And a sudden drop in oil prices on Tuesdays was what led to USD INR coming down a little bit, and the RBI was, of course, there during the markets and intervening at various levels, but not too aggressively. That's why we saw a shorter move this time. But the range that we've been talking about between 95 and 96 still seems to be held strongly. And all eyes will be on Kevin Walsh tomorrow on a speech at the Jackson Hall meeting. And let's see if he speaks a little bit aggressively this time compared to his other speeches. And after all the measures that the government took, the yields still stay at higher levels in the US. Thank you all so much for listening. I will catch up tomorrow with a fresh round of updates. Thank you.